I've recently seen a lot of communication requesting agents and lenders stop using the phrase marry the house but date the rate because it is unethical and misleading. Is it? In my opinion, that depends on the presentation. Yes, in theory, you can refinance your mortgage down the road if there's a significant rate decrease. However, you will have to requalify for that mortgage all over again. So if there's a change in your income, credit score, or DTI, you may not qualify for the refinance. Then there's the property value. If there's a significant drop in value causing you to become underwater on your mortgage, there will likely be an appraisal gap. If you can't cover that gap with cash out of pocket, the refinance option is unlikely. I saw a lot of this back in 2010 and 2011 with buyers who took out risky loan options prior to 2008, such as adjustable rate mortgages and mortgages with balloon payments. In the end, making their monthly payments significantly higher than if they would have simply chosen a fixed rate mortgage. They qualified for the fixed rate refinance but could not bring cash to closing to cover the appraisal gap. They're unable to sell because they're underwater. The final option was to leave and rent it out, but oftentimes the market rent did not cover the entire mortgage payment, leaving a monthly payment deficit. In the end, a lot of people simply said, everyone start packing, we're going to deed in lieu this back to the bank. I don't want it anymore. And the banks were like, we don't want it either. Yeah, it was good times. The lesson here is if you are going to date your rate, make sure you can afford your date to begin with, and also make sure your date is stable and fixed. It's just the least risky thing to do.